this class of 2018, can you tell me some of the standout figures from the progress you've made in terms of the companies and also in terms of gender balance?
The class of 2018. So these are the startups we funded last year, so it's just 1 year's class. We put 23 million into 132 companies, and we had 82 what we call high potential startups, which we think have a seed round, enough runway for 18 months, and our ambition is they get to 1 million and above. And we have 50 companies where it's 50k, and we hope that will allow them to get to a seed round in the next 6 to 12 months.
One of the things I took from your speech was need for more focus on entrepreneurs' relief, a more fairer tax treatment for entrepreneurs who are taking risks, who are described as heroes of the economy. But I hear it again and again that the UK has a bit more fair, equitable tax treatment for entrepreneurs that is actually resulting in more companies being invested in by entrepreneurs. What do you think needs to happen in Ireland?
So the first thing I would say is that the remarks that are made are because we talk to founders and entrepreneurs regularly and investors. Right? It's a high risk business, and perhaps the level of risk isn't necessarily well understood. It's a very difficult, it's very risky, things never work out as you plan. So the other bit about that is that you should have a tax system that is internationally competitive. So what we're doing is feeding back and reflecting back the views of founders and early stage investors. And it's not to say we should do exactly what's happening in other countries, whether they're an island close by or internationally, but certainly the view from the founders and entrepreneurs who are taking the risks is that more needs to be done. And why is that? Well, they're taking huge sacrifice. So the capital gains piece, we can probably do some more there according to the founders. A huge issue is talent. This isn't a solo sport. Everybody on our panels today talked about the team. You can't do it on your own. But how can you afford to attract real talent when you have no money? Or you can't pay very much? So that share options piece, critically important. And then on the investor side, we'd like to feed back that more could be done there to make high risk investments more attractive, not to eliminate the risk. And certainly when we look internationally, there's probably a bit more we can do to make Ireland move towards that, because we won't ever copy. Other countries have different economies and different structures, but there is more we can do, and we just want to reflect that back. And I suppose the other piece is that, if you're a large company, you have IBEC to speak for you. If you're a farmer, you have the Irish Farmers Association. If you're a startup, it's like Henry Kissinger. Who do you talk to? Who do you call when you want to talk to startups? So what we're doing is reflecting back what we're hearing from founders, and these are the founders who are the best and the brightest and taking the most risk.
Now, my final question relates to Brexit. How do you think Brexit will affect the startup scene, and more laterally then, or broadly, the broader economy? How prepared are we for what's going to happen?
Okay. So in dealing with startup, I think it's fantastic. From in my view and who we work with, chaos, uncertainty, not knowing what's going to happen is brilliant for startups. The startups we work with, they have high margins, they're nimble, they have to pivot, they see market opportunities. The companies who will suffer are companies with established cost bases, fixed markets, find it difficult to diversify. So from a startup perspective of the startups we work with, unless you have a physical product, it's very unlikely in the main that our startups are impacted by Brexit. The UK will remain a key overseas market, but our next adjacent market is the US from a software perspective. And most of our software companies are tech, so that's not a barrier. The sea isn't a barrier for a software company, So Brexit, I would see it no more than any other uncertainty an opportunity. It's a positive. Now, if you flip that around and you look at the broader economy, and we have a lot of family-owned businesses, it is a huge challenge where your profit margins aren't high and you're in the UK currently with your business model. So we've been saying for the last 2 years, you need to think about that really, really carefully. You need to not only look at where you sell, but where your supply chain is. And have you thought about customs, for example, which was a big blind spot for many people. We've put on clinics, we've offered grants, and what we've said is, look, it takes 12 to 18 months to diversify, depending on what you're doing. You need to start planning now. To do that, you need to make sure you're as competitive as possible, because if your margins are eroded by sterling fluctuations, you need to innovate so that, if you're going to new markets, will they need different products or the same products with a twist? And you'll have different competitors, and perhaps there's different market dynamics. So it's about innovation, competitiveness and diversification. So easy to say, but it requires companies to invest, and they won't lose out. How can you lose out by being more competitive? How can you lose out by being more innovative? And how can you not mitigate your risk by trying to diversify? And particularly the last one's particularly difficult. But it's linked to the other two, because low margin businesses, they're at the mercy of currency fluctuations, because sterling, if it's a significant part of your business, your margin is wiped out if there's a significant movement. And then to replace existing customers. So it's not that we will not continue to trade with the UK, but we need to broaden the trading basket.